All right, my dear students, this is Ahmed Raza Darolia, and we are studying some accounting basics. And we just finished making a trial balance. Now, after trial balance, as you can see in the exercise that we discussed in some previous lessons, we need to prepare an income statement. Now, what is an income statement? Income statement, basically also known as profit and loss account. Income statement basically tells us that how much profit has the business earned or how much loss has the business incurred in a particular accounting period. It can be 1 year or it can be less than a year, maybe a bi-yearly or quarterly. We can make these accounts, or maybe monthly as well. So what we need to do, we need to prepare a trial balance, an income statement. Now if you want to make an income statement, we must have already been prepared a trial balance, or the trial balance may be instead given by the examiner. Now as you can see, we have already made the trial balance for our exercise. Now with the help of this trial balance, now we are going to make an income statement. Now let us discuss the few underlying concepts and the format that we use in a trial balance. Now, one thing you must understand, that a trial balance has two sides, one debit and one is credit. Uh, Although it may seem that the income statement is also has two sides, one debit and one credit, but that's not the case. An income statement, my dear students, the two sides for income statements are not debit or credit. Instead, these are just for illustration or presentation purposes. Okay, these two columns are not called debit or credit. Now, why have we actually made two columns? I'll tell you in a bit. We just need two columns for the presentation of an income statement. So first of all, in an income statement, we have sales. Sales is also known as revenue. Okay, sales or revenue, it is basically the amount that we have received when we have sold our goods. Okay, whenever we are selling these goods to our customers, okay, the amount on which we have sold these goods, the selling price of all of the goods collectively combined is known as sales or revenue. Now we need to deduct return inward from this. What is return inward? If some of the customers have returned those goods to us, this is known as return inward, also known as sales return. Okay. Then we have cost of sales. What is cost of sale? Cost of sales is basically the amount that these goods actually cost the business. Okay. One is selling price and one is cost price. So let's suppose we are selling something for $100 and that costed the business $80. Okay. So $80 is basically cost of sales. Okay. The cost price of the goods that we have sold in a particular period. So how to calculate cost of sales? First of all, we have opening inventory. Opening inventory is the amount of inventory that we had at the start of the accounting period. Okay, at the start of this new year, how much inventory we already had in our shelves was opening inventory. Now we need to add purchase in this opening inventory. We need to add the purchase. Then purchase is basically the goods that we have bought in the particular year. Okay. Then as you can see, the way we deducted return inward from sales, we also need to deduct return outward from purchase. Return inward are the goods that are returned by our customers because these are not fit or not suitable for them, or maybe if we have sent goods with wrong size or specification. And return inward is the case when we are returning goods to a supplier due to the reasons that I just mentioned. This is known as return outward, also known as purchase return. Okay, we can also write purchase return. Then we have another thing, carriage inwards. Now my dear student, there are two types of carriage. Carriage is basically transportation cost. One is carriage inward and another one is carriage outward. Carriage inward means whenever we are buying goods from our suppliers, so the transportation cost that we are incurring in bringing the goods into the business is known as carriage inwards. Okay, so the carriage inward is basically a cost for the business, therefore it is added and it increases our cost, therefore it is being added in purchases. And there is another carriage known as carriage outward. Carriage outward is basically the transportation cost that we have incurred to deliver these goods to the customers' homes, maybe. Okay, so this is carriage outward. So carriage inward always comes in an income statement in a cost of sales section, and carriage outward comes in an expense section. Okay, we need to charge it as an expense. Then we have a closing inventory. Uh, let us understand this format. Why are we adding some items and deducting some items at the same time? Opening inventory means this inventory was there when we started off this year. Okay, this inventory was already present in our store. Then we purchase some new inventory, therefore purchases will increases our inventory, and if we return some of the inventory that was faulty, we need to deduct that, and that carriage or transportation cost increases our cost, therefore we are adding up. And the closing inventory is the inventory that is left at the end of the year. Now my dear students, there may be the case that at the end of the year, that is 31st December, we have still have a few items left in our inventory, or most of the items are still there because we keep replenishing our inventory, and as soon as the stock goes down, we order new stock. Okay, so it cannot be that at year end our store is entirely empty. That's not usually the case unless and until we are closing down the store. So in that case, the store will be empty. Okay, so the inventory that is left at the year end should not be charged this year. Why? Because we are going to sell this inventory in the next year, therefore we are going to charge this inventory in the next accounting period, therefore we are deducting this closing inventory. Now if we add up and subtract all of these things, we come up with the item that is cost of sales. Okay, now if we deduct sales and cost of sale, we are left with gross profit. Just give me a minute. Okay, so if we deduct cost of sales from the sales figure, we are left with gross profit. Now why is this called gross profit? This is not the final profit for the business. Instead, we need to deduct some of the items, that is expenses, from this gross profit. So therefore we name it as a gross profit. Now after gross profit, there are two more adjustments. One is other income. What is other income? Other income are basically incomes that are not relating to the trading activities. Now, any income that is other than buying and selling of goods, it is known as other income. Now, in the question, there can be anything that is named as a received, rent received, or maybe commission received, or maybe discount received. Okay, or maybe fees received. So any income that is received would come usually come in a other income section. Okay, now after other income, there would be will be charging all of the expenses. Expenses are necessary to run the business, to operate the business, and finally we are left with the final figure is known as profit for the year. Okay, profit for the year. In the previous terminology, it was being known as net profit, but the current terminology that is used by the examiner of CAIE, the examiner uses profit for the year. Okay, first of all, my dear, we need the sales figure, sales also known as revenue. Now as you can see, all of these items are given here. Sales is 1,250,000. Okay, this is sales, and we need to enter the sales in a why have we entered the sales in the first column? Because firstly we need to deduct this return inward from the sales in order to calculate the final sales value, that is net sales. Now as you can see, there is a return inward, also known as sales return. We need to deduct this sales return from the sale figure in order to calculate the final value of sale, which is also sometimes known as net sales, but the examiner usually not label this figure, therefore I am not also doing it. I'm just writing it in the next column. Okay, this is net sales. Now we have cost of sale. First of all, we have opening inventory. Now just remember, in a trial balance, whenever we have any inventory, trial balance always contain an opening inventory. Now as you can see, we do not have any opening inventory here. And what is the reason behind that? The reason behind that is that in this question, as you can see, we are Mr. Riadi. We have just started the business this year. Okay, if we have just started the business this year, therefore we do not have any opening inventory because this is a new business. Okay, So therefore we do not have any opening inventory, so we do not need to write opening inventory out here. Okay, then we have purchases. Now as you can see, purchases or ordinary goods purchases, it's already given 42,500. Then what about the return outward? We can find the return outward in a trial balance. Trial balance must be given by the examiner, or we need to prepare a trial balance ourselves. Okay, now as you can see, there is a return outward, that is 5,000. Return outward is also known as purchase return. This means we have returned those faulty goods to our supplier. Okay, then we have a carriage cost, transportation cost. Now we have already studied there can be two types of carriage. One is carriage inward and another one may be carriage outward. Now the carriage inward always comes in a cost of sales section, and a carriage outward always comes in a expense section. Now we can find the carriage inward here. It is basically a transportation cost. Then we have closing inventory. Now you must remember, my dear students, that opening inventory always comes in a trial balance, and a closing inventory is never given in a trial balance. Instead, it is always given in the notes or additional information. Now as you can see in the note, inventory unsold at the end of the year was 25,000. Now at the year end we are left with this inventory, so therefore we are not going to charge inventory in this year. Instead we are going to charge this inventory in the next accounting period. Okay, now if we add opening and purchase and carriage inward, and if we deduct return outward and closing inventory, we are left with the value of cost of sale. Now as you can see in this question, I have written cost of sale twice. Why? Once I have written the cost of sale as a heading, and secondly I have written cost of sale as a label and in front of this item, so this must be followed. Now if we deduct cost of sale from this net sales value, we are left with the profit, that is gross profit. Okay, so the goods that have actually cost the business $15,500, we have sold those goods on 97,250. Now as you can see, Mr. ARD is enjoying great gross profits. Okay, so the gross profit value is very high. Normally it's not in the case in the businesses, because there is very much competition out there. Then we have other incomes. Now other income contains anything that has received in the end, rent received, or sometimes examiner refer to as rent receivable, or commission received, or commission receivable, and maybe discount received. Now as you can see, there are two received here. One is rent received and one is discount received. So all of the items that are received, we need to write it here. So okay, so there are two other incomes in this case. So as you can see, anything that has to be added or subtracted, I am writing it in the first column, and the subtotals or maybe final values are coming in the second column. Now there are two other incomes, we need to add both of these in order to get this other income. Now what happens if we add this other income to gross profit? If we add up both of these items, this value doesn't has any name. This is a no name figure. Okay, so why are we writing it if it's a no name figure? Sometimes examiner write this item as a different item, and sometimes examiner also gives 1 mark for this. Therefore we need to calculate this no name value. Okay, now what we need to do, we need to deduct all of the expenses. Now as you can see in a trial balance, what are the expenses? We need to write expenses one by one. First of all, we have carriage outward. Okay, carriage outward is the transportation that is incurred in delivering the goods to the customer, and carriage inward is the transportation that is being incurred in buying goods or bringing goods into the business. Okay, then we have some other items such as insurance. Now what is the insurance? Insurance, as you may be aware, is for risky to avoid or minimize a risk, maybe for our property or maybe for our vehicles and so on and so forth. Then we have rent. If we have paying rent, it is an expense, and if instead rent is being received, as you can see here, it is an other income. Okay, then we have discount allowed. There are two types of discount, one is allowed and one is received. Okay, when we are paying our suppliers earlier than promised, then therefore it is a discount received, it is an income for the business. And if our customers are paying us earlier than they promised, so therefore we are allowing them discount. So discount allowed is obviously an expense for the business, and discount received, it's an income for the business. Now I am writing all of the expenses in the first column, and we need to add up all of these expenses in the second column. Now what happens, we need to deduct the expenses from this no name figure in order to calculate the final profit, that is profit for the year, also previously known as net profit. Okay, so this is basically an income statement which was also previously known as profit and loss account, basically calculates that how much profit we have earned during the year and what was the main benefit of conducting the business this year. Okay, so this is basically an income statement.